Howdy, Jacob here. Today we're looking at Euroseas in the marine transportation industry. Very small company, 253 million market cap on 313 million enterprise value, 7% dividend yield, very substantial, and 59% held by insiders. So a huge insider ownership here, which means that hopefully there's a better chance that the company is going to do things better in line with shareholder value, with increasing shareholder value since they had stake in the business. Incorporated in 2005 out in Greece. Okay, let's go to the balance sheet. 26 million cash on hand with 52 million in long-term debt, 55 million in short-term debt. So they do have 55 million in debt due in the next year. And it doesn't look like historically they've been quick at paying that off. So, but they do have 55 million in rolling 12. So it's just going to be the company is going to really have to push to pay that short term debt out or refinance it. Use of cash. I mean, it really didn't make any money until 2020 and 2021, 2022. Before that, they made no money. So that's interesting to see. And then use of cash, a lot of this other, don't know what that means, a little bit of share repurchases and a little bit of the debt or the dividend payout, which again looks fine right now at 14 million and 55 rolling 12. It's 20%, but I'm just not confident that this is sustainable given that I just have 2 years of data of profitability and their revenue growth went up astronomically. So that's where I'm going to be a little skeptical, but I'm going to start making some assumptions here. Okay, so let's go revenue side. I just don't, I mean, with it, how fast it's grown recently, I think I would not be surprised at all if there was a halt in extreme growth, really. And then as for margins, I'm probably just going to do an average because it has negative in here. So maybe 15, 25. And then share changes. I mean, they've been buying back a little bit of shares recently, but again, what's the long term of that? I don't know. I guess 1% increase. I would really just, yeah, I feel like I'm shooting from the hip here, and I'm just guessing, which most of the time you don't want to be doing. I mean, it's your initial valuation, so you're never going to buy anything from your initial valuation, hopefully. But keep in mind that I'm just going off of the numbers here, and with them having such a short history of extreme profitability, extreme return on invested capital, I'm being extremely conservative. So hopefully you enjoyed the video and have a fantastic rest of your day.